Hello everyone, this is Anushka Jain, CA and ACCA, your mentor for ACCA exams. In this video, I'm going to cover the question Wheel Company, which is from the Performance Management pre-December 2024 mock exam. It's gonna give you a very good understanding of the concept of activity-based costing. So let's begin. Wheel Company specializes in making a range of rubber-based products, including car tires. There are three different types of car tires: Model R 13-inch, Model X 15-inch, and Model W 17-inch tires. The production of these tires involve usage of advanced manufacturing technology with similar processes and activity types. The budgeted information of Wheel Company for the upcoming year is as follows: production capacity to be utilized 85%, prime cost $1.2 million, and overheads are given to you four types: production order, machine setups, production run, and storage. The costs are 150,000, 380,000, 700,000, and 100,000. So the cost driver rates are given to you, which is 750 per order, $3,800 per setup, $7,000 per production run, and $125 per ton day. Okay. Now, the budgeted capacity to be utilized is as shown above, including the following activity levels pertaining to the production of model R, X, and W. Number of orders 30, number of setups 16, ton days of storage 120, and production quantities 900 units. Similar data is given for model X and W. The standard prime cost per unit for the three models are $95, $105, and $120 respectively. Wheel Company is currently adopting activity based budgeting as their planning process. So, this data is given to you, and now we have to solve for the questions given here. So, the first question that we have is, what are the budgeted overheads for model R, X, and W? Okay, so let us come to Excel to solve. So here we have the four different types of overheads which were given to us in the question: production order, machine setup, production run, and storage. And I've noted down their cost driver rate here. And I'll write down the relevant cost driver. Now, for production order, the cost driver would be number of orders. For machine setup, the cost driver would be number of setups. For production run, the number of production run is same as the number of setups, because every time you set up, you're going to do a production run. So here also I've written down number of setups, and storage will be 10 days of storage. So that is 30, 16, 16, and 120. And similarly, I've copied the data from the question for 35, 12, 12, and 150. And here it is 25, 15, 15, and 190. Now it's very simple. What I have to do is I just simply multiply the cost driver rate with the number of cost driver. So that gives us the amount: 20,500, 60,800, 112,000, 15,000. Total overheads for model R is $210,300. And I can calculate it similarly for model X. You will see that I have frozen this particular column where the cost driver rate is given, so that I can simply copy paste the formula from one cell to another. You can also do it in exam. So I get the amounts here and I can total them up. And then model W, similarly 715 to 25. It won't take a lot of time in exam as it is a computer based exam and you can copy, drag the formula. So please save your time, learn these tricks beforehand when you're practicing. So that was question number 26, the total overheads for the three different models. Now let us come to the next question. The next question is, what is the total cost per unit for model R, X, and W? So we were given with the prime cost. Here, see, we were given with the prime cost What is the prime cost? Sum of all the direct costs is known as prime cost. So now, model R, X, and W. I have their number of units given to me in the question. I have their fixed cost calculated here, 210, 174, 600 and 204500. I have their prime cost. Can I calculate the fixed cost per unit? I simply have to divide the total fixed cost by the number of units and I get the fixed cost per unit. And when I sum it up, it gives me the total cost per unit. And note, prime cost means direct material cost and direct labor cost. So all the direct costs, they are classified and known as prime cost. Next question is select whether each of the following justifications pertaining to the application of activity based budgeting is or are correct or incorrect. So the first one is the value of overheads is relatively significant. You have to tell whether the application of activity based budgeting will be relevant here or not. So, yes, companies that have significant overheads need to have a more complex costing method when it comes to estimating and accounting for such costs. This is required in order to reflect a more accurate and meaningful result for performance management. And therefore, the answer would be correct. Next statement is the overheads per unit for each model of tire are all fairly similar. If it's going to be similar, then activity based costing should not be applicable. So, having a fairly similar overheads per unit may imply similar complexities or activity levels involved for each model of tire. Hence, the improvement in cost estimation using an activity based approach may not be significant, hence, less justification for its need. So, this will be incorrect. Next, Wheel Company is applying advanced manufacturing technology in its production that involves a range of activity types. In that case, yes, activity based costing or budgeting will be relevant because complexities of work in such environment are likely to be far more than a traditional labor intensive environment. Hence, a more complex costing method of estimating and accounting for overheads based on cause and effect relationship will be more appropriate for Wheel Company. So, this will be true. Let's move to the next question. Which of the following are least likely to be affected by the implementation of activity based budgeting? So, the first one is information system in Wheel Company. See, ABB requires enhancements to the information system to track activities, costs, and performance metrics more effectively. Therefore, the information system is likely to be impacted, so this is not going to be an option. Next is mission of Wheel Company. The mission of a company is typically a broad, long term statement of purpose and is independent of specific budgeting methods. So, ABB is unlikely to have any significant impact on the mission. So, this will be one of the correct answers. But, anyways, we have to select just one. This will be the right answer. Let's see. But we'll evaluate the other two options also. Technical competencies of finance team and Wheel Company. So, ABB may demand a higher level of technical knowledge and skills from the finance team to handle complex cost analysis and activity tracking. Hence, the finance team's competencies are likely to be impacted. So this will not be right option. And then pricing decision for the tires. ABB provides detailed cost information which can influence pricing strategies for products. The pricing decisions for tires may be adjusted based on the insights gained from ABB. So this aspect is likely to be affected. So this will also not be the right option. So this is the correct option, mission of Wheel Company. Moving on. The last question. Which two of the following statements is not a limitation? So, this is the tricks which they follow in exam also. It is not a limitation. So, be very careful. in implementing activity based budgeting in wheel company. So the first statement is it deals with significant overheads that are driven by many different activities. See, one very important thing is here they are asking which two of the following statements. So you have to select two. If nothing is mentioned now, the deemed assumption is that you have to select only one statement. So be careful about that. Okay. So first one is it deals with significant overheads that are not driven by many different activities. So is the statement true? Yes. Not a limitation means what? It is a strength. That is what you have to highlight. Yes, this is a strength of ABB as it allows for more accurate allocation of overheads by identifying and assigning costs based on activity drivers. Therefore, it is not a limitation. Okay. So you have to select this one. Second one is it is complicated and expensive to implement as it requires detailed analysis of overheads and measuring of limitations. Is it a limitation? Yes, it is a limitation. So we don't have to select that. Then it may provide misleading information as many fixed costs do not vary with changes in volume of drivers in the short run. Is this a limitation? Yes, it is a limitation. So you don't select this. And last point is it may provide misleading information when most overheads are non-production volume related. See, ABB is designed to handle situations where overheads are not volume related, as it focuses on activities rather than just production volume. This makes it well suited for such scenarios. So this is not a limitation. So you will select this. Okay. So with this, we complete the solution of question wheel company. I hope you learned from it. And if you get any doubt, please post it in the comment section and I will get back to you. Thank you so much for watching. Wish you all the best for the exam. Thank you.